Welcome traders and investors. My name's Nandis and I'm for Dalrymple Trading. Today is the 5th of September 2025, Friday. Just going through the pre-market analysis video of the S&P 500 and WTI Crude Oil. Now, we have some very good news in terms of the S&P 500. We saw that we're breaking towards all-time highs once again, breaking past the 6,500 level. As I've been commenting in my previous videos, we're in the middle of a very, very strong bull market. We saw a correction that took us from the end of August through to the early stages of September, and ever since then we've pushed up. This is just a small correction on a long bullish trend. So we're in the phase of a price discovery phase now, so we should see prices pull in to that 6,500 level, possibly retest, because we're very extended at the moment, and I don't see this just going vertically up. I see us pulling back to some level, possibly to the 6,500 level or a bit lower before we push up to new highs early next week. Keeping in mind as well that on the 17th of September, we have a rates decision and it's forecast that rates will be cut. And that is probably being factored into the market right now as we speak. I'll be very surprised if rates are not cut on the 17th of September, but obviously that's something that's a little bit up in the air at the moment, but the market is definitely pricing that in, which means that it gives the S&P 500 even a more bullish momentum to the upside. Like I said, we're in the middle of a ripping bull market, so any opportunity to buy into these dips or corrections is a great time to invest as well, as a long-term investor, because we are playing this for the long game. Now, looking at WTI crude oil, what we saw, as I predicted in my previous video, is a pushback into the moving average and then a pushback down. Possibly today or early next week, we'll see prices push down, try to retest this level here at 61.50 at some point. We've seen that prices have been to the downside since earlier on in the year as well. If we keep going back, we can see that prices have just trying to be coming down in the longer term. So we saw a correction up, and then we're possibly seeing a downward trajectory down again until we hit some sort of resistance. The next level, significant level, is at that 61.50 level before we then obviously look for further price discovery to the downside. But that's too far ahead. We're only trading what's in front of us now, which is trying to sell into this strength in here. And then look for a downward move. Just a couple of things to keep in mind with WTI crude oil as well. It's anticipated that there will be OPEC will be increasing production, so that's probably one of the reasons for this weakness here. Also, the fact that US market is quite weak in terms of Main Street, right? The actual outlook for the market is quite weak, so therefore oil demand will be lower. That's the reason that we're seeing this downward shift. Keep in mind, though, of course, if there's any volatility between Russia and Ukraine, we could see prices rally back up again. So there is always that possibility, but for the short term, at least, short to medium term, prices are actually bearish and pushing to the downside with WTI crude oil. One thing that we have to also understand is that the US S&P 500 is very overvalued where it is today, historically speaking. So at some point, someday down the track, we will see a large correction coming into this market, which we haven't seen, right? And I think what's to be understood here is there's a big difference between Wall Street and Main Street. So Wall Street is obviously stocks and shares and things that we trade, and Main Street is the economy itself, the businesses and the bricks and mortar type operations that businesses that carry on, and the two don't necessarily have to be aligned. So we can see that the Wall Street stocks and the S&P 500 rallying, but deep down the economy could be not as good as it appears based on a price chart. And so that's what's happening in the US. The economy is probably not doing all that well because we've got tariffs on the way, which is a tax to the actual customer, and then obviously that reduces growth. So Main Street probably is suffering behind the scenes, but yet stocks and the actual Wall Street is rallying. So there is a discrepancy between the two. And some point down the track, these two will catch up. The question is when. We really don't know when that would happen. As traders and investors, our job is to stay on the right side of the market while it continues. So at the moment, it is still a bullish trend. It's too premature to say the world is ending and take an opposite direction. But at some point down the road, whether it's a year, 2 years, it's very hard to time these things. We will see a large correction. But at this point, we're buying into strength, and that's what we do. We're here to make money, not to speculate. So that's what we'll do. So if you're going to buy into this market, please make sure that you always follow your risk to reward ratios. You have a follow a proper trading plan. You're not just executing trades based on gut feel here, okay? Because there's certain levels that you need to look out for before you execute any kind of trade. So with that said, it's a weekend's coming up soon. So wishing you all a good weekend, and we'll chat to you next week. Happy trading.